Hello and welcome to another edition of the I Comply Fireside Chat series. This week's entry is Retail Wealth Management Ready for Virtual Assets. My name is Andrew Weiner, your friendly host, Head of Partnerships here at I Comply Investor Services, Inc. I'm joined today by some of my friends on the panel that I'd love to give a chance to introduce themselves, starting with my friend Lee on the right.
Hey, Andrew. Thanks very much for the invitation today. My brief introduction is I'm a 30-year-old man and boy financial services guy. Left school at 16 and went as a bank clerk at NatWest. Realised after a year that the banks were not a place to aspire to be operating within, and went out on my own and became a financial advisor at 18, the youngest in the country. I realized that technology was going to play a big part, and I embraced that wonderful thing called the internet in the late 90s and launched the first online wealth management business called moneybrain.com. We still have the name today. And during that time, we adopted from dial-up to broadband. I capitalized on that technology when the average IFA and wealth manager was still using a quill pen. We embraced the internet and suddenly went from doing £20,000 worth of commission a month to near on £1 million a month, and floated that company on the London Stock Exchange early 2002. It all went pop in 2008-09 because we were a big mortgage business and we were reliant on the money markets. And I went through 2 years of pain and vowed never to be reliant on the traditional banking markets and securitization ever again. And I came across this wonderful thing called crowdfunding. And crowdfunding and peer-to-peer has become global. And crowdfunding has now grown up to become the blockchain. And this is where we are today. And we've now digitized our peer-to-peer business. And we also have our own asset-backed currency BIPs, which is the first, I believe, in the world that's received a letter of no action from the regulator to be able to distribute as an exchange token to anybody in the world that isn't barred. So we can transfer value between about 170 countries out of the 200 main countries. Very pleased that India is now allowing that to happen, and we're excited to roll out. And we've basically accelerated 5 years development within the last 5 months. So it's an exciting place to be.
Thank you, Lee. It sounds like you have decades of experience in both the traditional markets and, of course, the new space of virtual assets. And your penetration with MoneyBrain, BIPs, and everything you've done so far is incredible. I'm so glad to have you on the panel today. Kicking it over to Sanjay. Sanjay, I'd love to let the audience know where you're from.
Thank you, Andrea, and also a friendly panelist. Just wanted to reflect on that. And Lee, I liked your comment, man as a man and a boy. So from a man, you have progressed to a boy. So that I like it, thinking young, right? I think that's the way I think about it, right? So thank you very much. It's a pleasure, first of all, Andrew, for inviting me and joining this panel. Lee, it's a pleasure to talk alongside you. What you have achieved is just tremendous. I too have spent, I'm still young. As I said, I'm going from a man to a boy. I've spent about 30 years of my life in the financial service industry, almost at C levels, doing disruption in companies like State Street, BlackRock, Citibank, and everything else, leading, and all on the public market side, basically focusing on the buy side, on the private asset market, public asset market side. But then, in about 3-4 years ago, I took, I decided to, and I got Lee's intuition at that stage, and I said, banks are not, I don't want to do a rear view mirror thing anymore. I want to do a windscreen. I want to drive through the windscreen. So basically created a couple of accelerators, venture funds. We set up venture studios, innovation, all focus on enabling capabilities that are coming out in the marketplace. But with the basic theme around two things. One is blockchain, because I think it's the fifth thing. I speak at a lot of business schools, and I think this is the fifth thing that it will change humankind, in addition to language, print, engines, and internet. And I think the other aspect is that the full private asset marketplace, which is approximately 5 times bigger than public asset marketplace, is up for takes, right? All governments are producing financial inclusivity. That's where the alpha gets generated. And the point is, how do we bring this private asset marketplace to a common person who can invest $10, €100, or 50 rupees, or 20 dirhams, or 30 yens, so that they can participate in the asset and create a liquidity event for them as it is. Currently, I'm involved in a few things in Vanium Capital Partners, as you see, which we provide price transparency and price discovery for private assets on a consistent manner that the regulators have agreed that this can be termed as level 2 assets, i.e. tradable. From an untradable asset, we've already done that on commercial real estate. I'm also an advisor and board member at TallyX, where we have done DFTR supply chain financing, where we have created a supply chain financing capability and a token that is backed by the receivables that allows financial inclusivity and funding. It's a $7.5 trillion marketplace on a daily basis. That is a problem. And the third thing is, Lee, which I did not mention before, is I'm also created a Bloomberg terminal on cryptocurrencies, which is up and running with 2,000 currencies and connected to 70 exchanges. And it's got news, views, and trading strategies and everything else. So basically, I'm a believer of crypto to some extent, but I'm a firm believer of, and I know Andrew is going to scold me on this, I'm a firm believer of security tokens, i.e. tokens that represents an asset and is backed by an asset, right? And I think that I'm a firm believer of that, but there's a huge value proposition to be, huge hurdles to be crossed there. And I think one of them is the valuation aspect, which is what we are solving through Vanium Capital Partners. I do believe that we are living in an AC time very soon, that is after COVID. And I believe that digitization of securities and the private and the representation of private asset in this digitization is going to be fast and furious. And what was going to happen in 2025, 2026 is going to happen in 2021, 2022. Thank you, Andrew, and a pleasure to speak with you, Lee.
You too.
And thank you for the background, gentlemen. You know, just between the two of you, we have about half a century of experience here in both sides of the equation of wealth management.
And we're still boys.
And we're still boys. And there's a lot of road ahead of us, as we've seen, and we've mentioned a couple of times here that, you know, the testing ground for digital anything was the market of currencies like crypto. And as we've seen here, people with deep experience in the markets that have been around for decades have all shifted. Everybody that was in C-suite, you know, in the 1980s and 90s, we see here in the 2000s and 2020s, are looking at virtual asset applications. And, you know, the problems to solve, especially when you're a wealth manager and you're considering, how do I offer this product to the clients that I'm serving, is where do you start? As a wealth manager, retail, you know, customer of yours, how would you advise, educate what is available today to do the research and to get good sources of truth on any of these assets that you might be considering? So I think we should set the table for the audience here and just start very basic. Lee, if you were, you know, a wealth manager and you've just been working in the traditional space and you woke up one day and I'm going to spin up a platform, I'm going to have a website and a portal for people to log in to transact digitally, where do you think you would start?
I think it's you start from a place of trust and regulation. And I think I spent many years avoiding the digital asset space because of the bad actors within it, and they were plentiful. And the only reason I decided to raise my head above the parapet, interestingly, was Coinbase. I'm one of only a couple of companies that have client money permissions with Barclays in the UK. And Coinbase were a new entrant to that a couple of years ago. And so once Coinbase got Barclays Bank accreditation for the transfer of digital assets, I agreed to state that, you know, this is an area that is the future. We were one of the first to get involved in peer-to-peer and crowdfunding, when it went from non-regulation to full regulation. And so I made the conscious decision to try and shape a good environment of good actors for crypto and blockchain from non-regulated to becoming fully regulated, which it will be in January 2021 as a result of the Global Financial Action Task Force. So I played a part in the good rules that we need to adopt with, interestingly, a company called Global Digital Finance, who were an organization that brought together trusted regulators from around the world. Say, how do we deal with this crypto thing? How do we deal with this blockchain thing? Because it's still very much like Star Trek to your average individual out there. And all they've heard of is criminals, gangsters, drug dealers, everything that's bad about crypto is what people think about. So before anybody's to venture in this, they would need to go, in my opinion, through a trusted, regulated custodian gateway, and deal with people who have got an established track record. There's no two ways about it. The likes of Bitcoin, whilst it's not necessarily a good payment methodology, the concept of a limited supply and a store of value is sound. And I think what we're looking to do, and we'll recommend other people to do, is to see the basics first, understand what Bitcoin is and what it was built for, in a simple Janet and John paint by numbers idea. And then the easiest way in my mind for people to educate themselves is buy some. Even if we give them a tenner ourselves, $10, here's $10, go and have a go and have a look. And then once you actually open the door and realize it's relatively simple now to buy $10 worth of a digital asset, people then get intrigued because they feel empowered. So I think try somebody like Coinbase or MoneyBrain or somebody first as a wealth manager to try and get a basic understanding, and then explore the opportunities because they're plentiful. It's just one piece of the jigsaw, crypto and Bitcoin. The usability of the technology is, particularly with COVID, and I love the post-COVID reference that Sanjay made. That's literally what's happened. The acceleration of the use of virtual technology and digital technology has been accelerated 10, 20x, and we've ventured into technological areas that would have previously taken 3 years within 3 months. So for me, it's all about trust. And the thing is, everybody is asking about it now. So wealth managers need to pull the socks up, or else people will dump the wealth managers and go on the likes of Robinhood and these other wealth management platforms. Wealth managers need to advise and help and assist. If they don't, people will go and find it themselves. So that's what I'd recommend. If they want to get involved in this space, get a trusted partnership established.
Absolutely.
And that first kind of seed there, a wealth manager has to take into consideration what FATF has released, especially this travel rule. Let's talk a little bit more about that. Sanjay, I've got a question from the audience for you right on that subject here. Is how might the FATF travel rule impact wealth managers who are working with virtual assets? What does this change about how they conduct business, or the principles of what's happening in the back office?
So, COVID will, the travel rules will remain and not remain. People have, economies have to return, people have to start doing work. In fact, I think that, people staying in lockdown, we have stopped our immunity. Our immunity is going down, actually, as opposed to hurt. So my perspective is, and I'll speak from a little bit, I was one of the initiators of global wealth management, right? I did the full transformation of Smith Barney and Private Bank of Citibank, right? So two aspects that come to my mind, and I'll catch up to later. So yes, travel restrictions and travel rules that are in place will not affect wealth managers because things are getting digitized. I'm talking to you today through Zoom, which I would not have done. We would have had a fireside chat because our preference was to do it personally. I think what the last 5-6 months have brought in that we can now electronically connect up with people, and we can electronically do business. People have started even putting money into businesses, right? Venture capital. You would not, VCs and PEs would not have invested in firms before without meeting the individual. Now they are. So I think that's what happened. The second thing is, just to carry on from Lee, and I think it will answer some of the questions, is because the digitization is happening fast and furious, and there are some digital exchanges coming up, the financial advisor of tomorrow, and let's talk about it. Usually the way the value proposition works is, let's talk about cryptocurrencies. Cryptocurrencies now, the alternate investment strategies in Americas, 2.5% of the alternate investment strategies can be invested into cryptocurrencies. That's the latest thing coming in. So now the institutions are jumping in and investing in cryptocurrencies to the extent they get comfortable with it. Of course, there's no Bloomberg terminal available to give them news views at what the exchange rates, what the rates are, what the price news and all those things are. But there are some terminals available in the marketplace like cryptocontrol.io. So information is now being shared electronically that allows institutions to go in and make some investment decision. But when you look at some of this information, and I mentioned cryptocontrol.io, they also have trading strategies for retail investors where they'll give them arbitrage situations of the same currency between two exchanges having two different prices, just like you had it in the public markets about 5 years ago, 10 years ago, 15 years ago, when we did not have so much of cross relationship between the exchanges. So the investors can actually, smart investors can go in and trade it. But I do believe the financial advisors of the future will not be advising people on public assets, will be advising people on private assets. Whether it is crypto, whether it is tokens representing an asset, they will be giving their advice. Research has started. If you go to Forge is the biggest marketplace for private asset marketplace today for private assets, right? Private firms, private companies, not for crypto, for private companies. You go out there, you could actually, because companies are taking longer to go to IPO, they have to create a liquidity event for the VCs, PE firms, or the individuals who have invested in it, or people who have got stock options planned, and they have found a way on how to present that. The biggest problem today that's happening for it to go real mainstream is the valuation, which is what is starting to happen now. The underlying valuation to support the underlying asset is happening now, which is totally transparent. As I say, trust through transparency. So if it's transparent, there's a complete price discovery, price transparency on it. Hence, the underlying asset, people can trust the value of it. If they can trust the value of it, they can trust the level of tokens on it. Think about tokens being no different from a mutual fund you invest in, a unit of mutual fund you invest in, which is a representation of the underlying asset, which is the mutual fund, right? You're buying a unit into it. Yes, it won't price daily, it will price monthly and everything else. So I think the financial inclusivity happened. The curve of what is offered to institutions today, where institutions are starting to invest in that, institutional investor, and usually in the previous times it used to be, and I'm going to say previous times, it used to take 5 to 10 years before it used to get offered to the retail investors and the sophisticated retail investors. That curve of 5 to 10 years, or that duration, has now come down to, I think, a year and a half, 2 years. So I think you will see this being offered very fast. I see the new financial advisory firms coming up, wealth management firms coming up, have financial advisors who will advise their clients on what assets, what crypto assets to buy or what private assets to invest in, right? That is where it will, and there'll be more research coverage on it. Think about in the last 1 year, the amount of coverage that cryptocurrencies have got, the amount of coverage that private asset marketplace has got, and the amount of private assets that have issued tokens. Again, regulators are catching on and everything else. And the other thing is, every government aim is to have financial inclusivity as a thing, because there's a big gap between the have and the have-nots. The haves are the people who can afford everything. The have-nots are the people at the bottom of the pyramid. The haves also invest in alpha generating assets. Now I want to democratize the alpha and offer that alpha on a private asset to a normal human being they can invest denomination, whatever currency denomination, 10, 20, 100, right? and they can enjoy a return and create a liquidity event for them by trading it on the exchange anytime, is the way on how every regulator is looking at it. So if you take the financial inclusivity angle, the regulators are much more easier. And you can solve the valuation angle, the regulators are much more easier. Once that happens, institutionals are already jumping in because they're sophisticated investors, registered investors, people like retail investors who are accredited are already jumping in. Now it will be available to masses because you can invest your $10 to $100 and you're not locked up for 8 to 9 years. You can create a liquidity event whenever you want. So I do believe that it's going to be fast and furious. And I think I'm not very familiar with the FATFA travel bans, but the point is, I think in the digital age, people are finding that they don't even need to turn up at the office, right, to be productive.
Well, just to touch on that, wealth managers who can no longer bring customers into their office and shake their hands in person and do wet ink signatures are increasingly turning to digital solutions and platforms to capture that market share that's just happened to slip through their fingers in what you called the COVID era, and hopefully not the after COVID era. But just on what you were saying there, and it's something we'll springboard into with Lee as well. If wealth managers are shifting into private assets, the way that you've outlined, how will they as fiduciaries be able to trust the investment data? And as a secondary follow-up there, does that mean that the wealth managers in the future will not be accessible to the non-accredited market?
I think if I just comment on the question before about the travel rule, because that's quite important. The main issue around travel rule is passporting of buyer and holder of asset around the world. So I think the audience might not be aware that the travel rule is, so if somebody comes to Moneybrain, they buy a digital asset, the owner of that asset is basically KYC AML'd, their name, their address, and that transaction is recorded against that particular unit of value and asset. And so if that person then decides to send that asset on, we as a regulated app and exchange will record that travel from one wallet to another. So we and other regulated businesses from January next year have to have a compliant footprint for every transaction, and that compliant footprint has to have an identity with it, a compliant identity with it. So the travel rule is basically tracking financial transactions to enable the authorities and mainly the people of the 200 bodies of the Financial Action Task Force to at any one time to be able to audit and record a financial transaction. So at this moment in time, as a rough guess, I'd say 60 or 70% of digital assets are unknown owners. So the last 6 to 12 months, there's been a shake-up, and the real shake-up will be in the next 3 to 4 months, is that if the assets are unknown because they were done pre-KYC identity money laundering checks, to cash out, they're going to have to go through identity full verification now and fess up that they've got a capital gain. So this travel rule basically is policing digital currency on a global basis and adopting money laundering checks to the asset value and the persons that own them. And what you're finding is people are moving jurisdiction. So the biggest exchange, likes of Bitstamp, interestingly have moved from the UK in the last 4 weeks back to Luxembourg. I imagine because a large percentage of their holdings are historical, and the new rules that we've all signed up to with the Financial Conduct Authority in the United Kingdom is to warrant the holdings of the assets and give them that stamp and accreditation so they can adhere to the travel rule, so that those assets can move from one regulated entity to another. So that's the travel rule and the monumental impact it's actually having on digital assets.
Thank you, Lee. And as I see here, we have a number of new people that have joined. And for those that just tuned in, we should make it clear for you that when we're talking about the travel rule, we're talking about the types of assets it applies to. It is not limited to currencies. Any traditional securitized assets, any virtual assets of your typical bond or debt or any type of equity that's coming to the market today for more traditional players in the markets will also be subject to this type of information sharing and this network of trust where you know the beneficiary and the originator of every single transaction of how these assets traded, where they traded, how much value was exchanged, so on and so forth. So for those of you who, when you hear virtual asset, you simply think Bitcoin, it's becoming a much broader conversation. And that's what we're kind of tackling here on the call today with Sanjay and Lee. So with that said, how would we manage from our personal wealth account in the future these two different types of classes of asset? Let's say I'm somebody that holds, a traditional cryptocurrency, but I also hold, some equity or in a REIT or a similar type of share certificate that's been virtually securitized for me. What might that look like for wealth managers going forward?
Well, we do it currently. So within the MoneyBrain app, we have traditional secured loan units of value, and we have digital. So we've created a technological bridge between traditional assets and what's really interesting, and cash. People don't appreciate now, and in the United Kingdom, we're massively leading the way. So we have a British cash account now on our app that allows immediate faster payment of sterling. And that is just a digital representation of a pound, and that is actually banked with the Bank of England. So we've got this global phenomenon about this central bank digital currency going to come around. It's already here, actually. It's just in a different legal framework. So in the UK, we have faster payment rails of e-money. And that e-money is just a digital representation of a pound in the Bank of England's ledger. So we actually permit the interoperability of a regulated asset, a cryptocurrency, and sterling now. And I think because the regulatory framework in the United Kingdom is quite acknowledged as the gold standard, particularly around data protection, and this is why the US put a massive block on Facebook, is they do not have the GDPR data framework to protect, secure, and have the integrity of that data transfer. So we can't, I've been back and forth with the SEC for nearly 18 months now to get our token of BIPs accredited, and they haven't got a clue. And they said, we don't have data protection. We don't have an ability to transfer value between state that simply. So they're actually playing catch up at a horrific rate at the moment. And you can see the dollar toppling as the world reserve currency because of their inability to adopt the new way money moves, which is digitally.
Yeah, I agree, Lee. I agree, Lee. But I think, if you look at the product, if you look at the new currency Finality, which is going to get launched, you may be aware of it. It's backed by about 20 banks and about 10 countries to help settle cross-border transactions, security transactions, not retail. So it's mostly institutional oriented. They have been able to, create a currency, but again, they're backed by some asset, and the asset they're backed up by is the currency of that place, whether it's Deutsche, whether it's pounds, whether it's euro, or anything else. So I always call these virtual assets, if they're not backed by an asset, then you have a problem, and then you have an issue of where it's a speculation or not a speculation. My perspective is that the following is that, and I appreciate you mentioning on the or the travel bans and travel rules, but our perspective is the following: that any security, or at least any digital security, is supposed to be transportable on a global basis and should comply with the rules and regulation. Of course, the domicile of that security and the domicile of the investor has to be understood and clearly understood, and they need to comply with both the regulations. So if buying a digital asset which has been issued in UK and I'm a US citizen, then I should be comply with both the rules and it's disclosable anywhere. The point is, how rich is your token? That's the point. If your virtual asset token is rich enough, just like I talked about the supply chain finance, if I can carry the token, all the richness of it, it is much more easily, first of all, transportable. I don't have to list it on every exchange because the information is carried on it. And when I invest in it, that investor's information is then attached to that token and reported to the local regulators. So I think it all depends on how rich your token is. Because if I go to Securitize, they have a token. That token is a dumb token. It has no information in it, excepting the name, right? So the point is, if the token is, and then that gives you confidence, and that will give confidence to the retail investors also to invest. I think, I'm talking to a bank in Dubai, and they're going to launch their wealth management services, and I told them one thing: hire financial advisors who can advise clients on what digital assets to buy, not what public securities to buy. You can run algorithms.
What we've done, Sanjay, we've not gone public with it. So within the app, we actually have gold, a tokenization of gold that's issued by the Perth Mint in Australia.
Okay.
So if you're talking about real world asset, we've got that, and that's part of our foundation of assets within BIPs. But what's really interesting, obviously the price rise in gold is very, you're talking about the transparency, it's there. But the beauty
Absolutely.
of it, if you want to buy any gold in the United Kingdom, it's £1,000 for an ounce. They're not they're not £1,500 now. Whereas you can buy £5 worth on our MoneyBrain app because they've tokenized it to within 18 digits. Yeah. So what we've been able to do is democratize the ability for the world with, it's a free app to download. And if they've only got $5, they can buy gold. And what we've been able to do is allow that to be interoperable to actually cash out in the local currency. Or what BIPs has enabled us to do is you can transfer that gold to our currency BIPs and send it around the world for a penny. So all our transfer costs, whether it's $5 or 5 million, are a penny. But if you want to do just gold, you can do just gold. And I think, right back at what you said at the initiation of the call, financial inclusion is key here. And the ability to democratize these glorious assets that are previously preserved of the wealthy and the hedge funds puts these guys on notice that they can't get away with ripping people off lower down the food chain anymore. And that's come very clear, very obvious with the adoption of mobiles and the ability to just click and play. And I'm excited about India, very much so. And PwC reached out to us last week about us going out there to provide that transparent service for people.
Well, let's talk about that. Let's talk about that, Lee. I've got access to 500 million people through the endpoint. The last mile has been solved. So we can talk to you about that. Just reach out to me. I think we don't have each other's emails, but
it's an exciting place to be. I mean, I love the collaboration globally. What COVID has done is brought us all together very, very quickly, very efficiently. And, we're here talking Canada. Where are you based, Sanjay? I'm sorry, I didn't even ask.
New York area.
New York. So we've brought different people around the world together, actually, with a common goal. And this is why I love the blockchain. It's global peer-to-peer. It's transparently globally. There's no rinky-dink going on. It really, puts a bit of warmth in my heart of the future of financial services that, was, really starting to lose faith earlier in the year. COVID has actually inspired the collaboration and the community to come together now.
Yeah.
Now, one follow-up question from the audience. When we mentioned the institution in Dubai looking at wealth management services in the digital application, something that came out was, how would custody or private key management impact the way that they set this up and how they actually run this side of their new business?
So the two problems we always had in this was, and I think I'm glad you mentioned Lee, because gold is very much an asset that anyone can evaluate, and hence your underlying token, which is backed by gold, you can know the unit value at any point of time. The two problems on private assets really going full-fledged was custody. Today on crypto, the custody is the exchange, basically. The custodian is the exchange. So you need to have independent custody, just like the public asset market. You need to, and people like State Street and all other people are setting up. Kingdom, I think Kingdom Trust is also a custodian. So there are a lot of, there are about 7-8 custodians, but I think the mainstream custodians have to step up because they are trusted, like State Street, Bank of New York, JP Morgan, Northern Trust, all those people, not to forget Standard Shire and all those kind of companies, right? So they have to step up. So independent custody has to happen. They have to follow the process, and independent valuation of the underlying asset has to happen. These are the two things that have to happen. What Lee has done is very smart. He has basically taken an asset that's freely traded in the marketplace and used that as a back, right, against your token, right? So now I can buy $2 worth of gold, right, and enjoy the alpha generation. I don't need to spend $3,000 to buy gold because I can't participate in it unless. And by the way, buying gold means I'll have to physically hold it. Now I don't even have to physically hold it, right? And
we want to buy it physically, Sanjay, but the UK will not sell gold to an organization.
Yes.
So we were actually wanting to hold in custody real gold, but we couldn't buy it. And then the Perth Mint in Australia came out with the idea and gave it the same London Bullion accreditation that Real Gold certification has to tokenize their real world gold. And so it's phenomenal. And it's been I think we're the only wallet in the world that actually allows it to happen. So people can buy it with a Visa or a MasterCard. They can buy it with Bitcoin. They can do everything. But equally, they can cash out in a local currency if they want. But more importantly from me is the custodian of that is now from January next year in the United Kingdom will be a regulated function. So the system controls of any normal security because we're a client money business anyway through our peer-to-peer investment platform. So we have daily returns to the regulator for cash, asset value, activity, and everything. So for us, it's actually a relatively it has been a relatively simple evolution. What I think the sector's going through with a lot of pain is most of the practitioners are not regulated people. Most of the practitioners are speculators. And I've kept very quiet about the DeFi world. DeFi, unfortunately, it's going to explode because it's built on sand and it's a Ponzi scheme. So once that's out of the way, the big boys will come back in and the grown-ups will. I didn't think I was going to have to. Last time when I came post ICO into the sector, I said, right, the kids have left the party, they've left the mess. We're going to tidy it up and use this decent technology for what it was designed for. But unfortunately, we've had this crazy stupidity of leverage 100x currency deposit. It's just complete rubbish, and it's going to end in tears. And I just hope it ends quickly and people don't get hurt, particularly retail investors don't get hurt. So, I'm in this for the technology, for the financial inclusion that it can bring, and the equality that it can deliver around the world. I'm not in it for the 50 golden Lambos and suddenly we've made 100,000x in the last 12 weeks.
Well, the last piece of that question was on the private key piece, because we just nailed it on custody. How will managers?
By the way, just Andrew, before you go there, the SEC just allowed all the custodians in this country to also hold crypto and in the United States. So they can hold the keys, and I think that brings about fiduciary responsibility around it, the independence around it, and then if the valuation issue gets solved for the private asset, not for gold, for private assets, then you're certainly clicking on this one very fast.
Yeah, the inherent risk is you would never want to lose your keys, and God forbid your wealth manager has a system that somebody gets into and gets the private keys. So, there's a critical data control issue here, and there's a critical technology concern around privacy of how this architecture would even look in a traditional, wealth management office. A lot of these folks do not have very robust technology systems. They don't have, $1 million subscriptions to the compliance software that the banks are using. What is out there for them today? We talked about Kingdom Trust, Prime Trust, and all these players on the custody side. Who is helping with great wallet technology and recoverable keys? As I saw Engrave, the wallet, come out with recently, where you can actually recover from the physical wallet a hash that would unlock your private keys on the other side. So there's some stuff that I've seen, but I'd love to learn from your explorations in the market for our audience here. What have you seen? What is out there?
Well, we created our own blockchain ledger. So we found it very, very nerving to, as a regulated institution, we did not feel comfortable unless it was insured. So we hold, I don't mind saying, we have some currency held with Bitstamp, but it's got a 100 million Lloyd's guarantee. We have some cold wallet storage, but we try and encourage people to hold their currency in BIPs, because that's held on a centralized ledger that we control, that we can recover if people hold the BIPs, because it's within our custodianship. The challenge becomes if they want to transfer from, because it's an ERC20 token, they can transfer to their external trust wallet and own their own keys, but that's their risk and their choice. And we do want to give people that continual freedom that if they want to control their own keys, they can. But from a traditional regulatory framework, we go from maybe a protected environment, but we do give the people the choice. If they want to take their assets into their own environment, then they're on their own. And I think as long as you make that transparently clear at the outset to people that, I suppose you can call it red, green, and amber crypto. That if you're dependent on your investor profile, they can take their own currency, they can do their own centralized elements if they want. We're probably not that type of proposition. I'd say we're more about a steady as you go, medium to long term digital asset player. But I know everybody gets panicky about holding their own keys. Well, you might want to say to the guy who's asking everybody at IBM to try and help him find his key for his £690 million worth of Bitcoin. I suppose that's when holding your own keys becomes a bit of a problem.
Now, as we wrap up, we've gone about 45 minutes so far. I'd love to ask the panel here, which major wealth management players are on the horizon to be the first to kind of enter this market and start replicating the frameworks developed by companies like MoneyBrain and similar, but from the institutional side? Is there anybody on the horizon that you can see just kind of making leagues and strides to being the first large institution to issue this at a global scale, across each border?
Goldman Sachs. We've been speaking to them for 2.5, 3 years. They appreciate the technology. They've just appointed a pretty savvy guy. I can't remember his name, but they've been they know the value. They know how much money they make via the existing clunky frameworks, and they know that's not going to be there in 3 to 5 years' time. So they know the disruption that's coming from this technology. Why wouldn't they want to be leaders? Barclays are equally aware of it and doing some really funky technology. But I think the big threat is the GAFA, the Google, the Amazon, the Facebook, and that they're the big wealth managers of the future. So in my mind, if they're not in it already, they're finished. If they haven't got a program, they're out the game. So those that are in it, that have gone public with it, the likes of Fidelity, the likes of JP Morgan, the likes of Goldman Sachs, that they're the daddies, I think, from a wealth management perspective, that are going to be mopping up. And then obviously there's the more nimble players. I think it's all up for grabs. You know, those guys that are actually burying their head in the sands are just protecting their jobs.
It's a blue water opportunity, which we have so few of these days. As you very pointedly pointed out, Google and Amazon are the biggest copycats in the world today. You put out great technology or a great product, and they will have something similar to it very shortly. So, Sanjay, similar question to you. Who are these big players you see on the horizon ready to challenge the traditional space and introduce virtual assets to wealth management?
So I think Lee is right that Goldman will pave the car paths, but the people who will win in this are people like Merrill Lynch and people like Morgan Stanley. Goldman is very, very forward-looking. They're already working on it, but they are not going to be the first mover. They're definitely not going to be the first mover. And their clients will not be the first mover, right? So I think the mid-size wealth managers, $30-50 billion who are managing wealth, like Stewart Partners and all those people, will come out first because they're less constrained. The clients are asking it for more, and they're more nimble, right? To get a word approved in Merrill Lynch probably takes about 5 committee sittings and 10 months to go through the process. Though I've done things much faster than that in 10 days, what used to take 10 months, but normally this is what happens, right? So I think and Lee said it very clearly. I have another saying which says, wait and see in this days and age is like wait and die. You're done. You can't. So they have to be very quick followers. So they already got in the drawing board, but they won't be out of the gate first. Out of the gate, I think, would be people like Midsize or Goldman, and then you'll see Merrill and Morgan Stanley go, but they will still dominate. I mean, Merrill Lynch is very dominant in the wealth management space on a global basis. They're very, very dominant in US, right? Not that dominant probably in London, but very, very dominant here. And they have set the pace, right? Very different. I think then bespoke small wealth manager, mid-sized wealth managers, and new digital banks will also become the forward-looking on how to provide wealth management advice on digital assets or virtual assets, however you want to call it. I mean, we call it with different names. So
the messaging working groups are ongoing. I'm sure we'll all have a standard.
We need to have a standard on name calling too. So sorry about that.
No, it's actually wonderful, and you've nailed it, especially in Lee's market. The FCA has just mentioned in the last couple of months that last year there are about 1.1 million digital wallets in circulation in their country. Today, there's 2.6 million digital wallets that have been KYC'd. Visa used to say that the market potential for this space for virtual assets is equivalent to the number of Visa cards in circulation. They have 5 billion cards in circulation. We have less than 5 million, wallets in most spaces. The market growth could be 4.995 billion people. It's wonderful.
And watch MasterCard. For wallets, watch MasterCard. They're much more forward-looking than Visa. I know Mr. Banga very well. He was my old colleague in Citi, but watch MasterCard. They are much more forward-looking. Again, they won't be first out of the door. That's the point. They won't be the first out of the door.
Sanjay, be really interested to know, we've been on a roadmap for a year with both MasterCard and Visa, and I'll be intrigued which one comes first. So that's an exclusive here.
You need any help on MasterCard, let me know. You need any help on MasterCard, let me know.
We all jump right after this. And what I would love to do is to let the audience know, how can people find you? Let's wrap it up and go around the table here. Lee, I'd love for you to let people know what your website is, how they can reach online via email, whatever. Please let the world know.
Sure. Twitter, I'm quite active on, and that's just Mr. Lee Burkett. You can find me on LinkedIn, just search Lee Burkett, and download the app, just search MoneyBrain in Google or Apple. So it's MoneyBrain.
Thank you, Lee. My friend Sanjay, where can people find you?
Very simple on LinkedIn, obviously, and my email. It's sanjay@ideas2results.com. That's my holding company. Very simple to get hold of me, and I think I look forward to connecting with a few people. And by the way, Lee, I did download the MoneyBrain app, but it's stuck on getting me a confirmation code on my mobile phone because I never put in my US country code, and it never asked me for one. So,
well, the US actually, I think, is blocked, Sanjay. Yes, doesn't like us anymore.
I can help you there too. So anyway,
guys, this was a tremendous conversation. I really appreciate you taking the time to educate some of the wealth managers entering this new marketplace of what they need to consider, how they could look for sources of truth to get good advice to the people that they're serving, what they need to look at in terms of custody, private keys, and even considering which of these asset classes available today makes any sense for the retail people that they serve. I really hope to have you both again at some point, whether it's in one of our op-eds or on another one of these panels, but I look forward to seeing you again.
Thank you.
Lovely to meet you, Sanjay. Thanks, Andrew, for the invitation.
My pleasure. Thank you. Thank you, Andrew, for the invitation. Lee, it's such a pleasure to learn from you.
And you too, sir.
Take care. Thank you.
Bye for now. Oh, and you can catch us again on the next Fireside Chat in about 2 weeks on the next Thursday. Topic will be announced on LinkedIn and Twitter, so watch out for it. Bye.
Take care. Thank you, Andrew. Great show.
Thanks, guys.